Relatively short-term question. This is on Bajaj Finance. So, Swati, on the charts, he's bought at an average price of 6,356. He is wondering whether to stay invested or book partial or full profit. Should he add more? He's looking at a short to medium term perspective. And indeed, Bajaj Finance has run up quite considerably in the recent past. So, would you take some money off the table?
Alex, you rightly pointed out that from last 3 to 4 months, we are continuously witnessing a very strong momentum rally in this particular counter and giving a positive returns. Now, currently, the only point is that on the daily chart, the stock has just shown a sign of a negative divergence, which indicates that probably we are likely to hit some selling pressures on every rise that we are witnessing from last 2 to 3 days. I will suggest to book the partial profits at the current level. Currently, the counter is trading at 18,805 levels. So, book your partial profit. Second partial, you can hold on by keeping a strict stop loss of 8,500 rupees on a downside and hold your second partials for immediate target of 9,202 and beyond that level 9,500 can be seen. So overall setup is definitely positive, but since you're looking for a very short term period of time, I will suggest to book your partial profits.
Okay, book some partial profits, Rajesh. Hopefully that helps you out. The stock is under a little bit of pressure, down about 1.5% in trade today. Murli is our next caller and calling us from Bengaluru. Murli, very good morning to you. How can we help you today?
Very good morning to you. And I have only one query on the subject on your screen.
Okay.
Before that, I have a general query. Can you just inform us? This is a A-rated, A plus rated NCDs of good companies are available at a rate of 10%.
Sir, can you repeat your question? You're talking about...
A-rated NCD
yes.
of good companies are available at the interest count of 10%.
Okay.
Whereas, what shall be the investment expectation from the market this year, 24, 25, 26?
Okay, so on your A-rated paper, are you referring to a publicly issued non-convertible debenture?
Yeah, NCDs like SMC Global, Urgo Capital.
Okay, so
which are A-rated?
In the context of the credit rating on a bond, Murli, an A rating is, of course, the third rung of rating. It starts with AAA, which is usually the very large issuers, including the government, which is sovereign rating. Yes. You have public sector utilities that are also AAA rated. And then the next rung is AA. The rung below that is A. And the one below that is BBB, which is investment grade. So this is maybe just one rung above investment grade, which is not to suggest that there is a credit risk involved, but there are reasons why the credit rating agency has pegged it at A. So there is an element, not a very large element, but there is an element of credit risk that you are taking, which is why you are getting a 10% value. So bear in mind that you have to study the fundamentals of this company when you venture out and get NCDs as well. Because to a certain extent, some have argued in the past that when you go and buy these NCDs or invest in these NCDs or bonds, you are taking some element of equity risk as well. So you need to know whether the risk that you are taking is comparable or is feasible when you compare it with the return. So specifically, what is your question on eThoughts?
Yeah, I bought 484 shares at the rate of 2,598.
Okay.
I started initially as a short term with EST. But considering the fact that now it's doing well, can I, right now I'm in a loss, maybe a short term, can I hold it for a year?
For a year, okay. So let me
number two, number two, you didn't answer my other query, excuse me, that what can be the, in the context of 10% return on NCD, which is short term 18 months, what can be the return I can expect in equity market, fair return, instead of NCD, I'll go to market, equity.
So Murli, there is no easy answer to that question, unfortunately, and if we had a way to predict, which is why you never compare a bond yield to an equity market, because equity depends on various factors that could be moving, whereas a bond yield is a factor of the coupon that you get from the company, right? It's like a fixed deposit. So if a bank is giving you a fixed deposit at 7 to 8% or 7% or thereabouts, then you are guaranteed that you will get that interest every month or every year rather. right? That is not true for the equity markets. However, a good...
I will take a slight higher risk.
Okay.
What can be the percentage?
Let me answer your question in the way that a lot of experts answer your question, which is that if you look at nominal GDP growth at 10% or thereabouts, and if you calculate equity and the companies that operate in India getting 2 percentage points more than that, then anywhere between 10 and 12% is a fair ask. It's not a guarantee, it's a fair ask in the long term for equity. Does that answer your question?
Thank you.
Okay.
Yeah, thank you.
Okay. So Swati, on ethos, we've gotten into a lot of not necessarily stock specific information, and well, this show is educational at the end of the day. Hopefully this has helped our viewers. But ethos, 2,598 rupees per share, 484 shares for a year. Does it make sense to hold?
Alex, you had correctly answered the question of Mr.
I'm glad. I'm glad.
Regarding the ethos, the technical view is little bit cautious because this particular counter is not giving the breakout of 2650 levels on the closing basis. Multiple resistance has been formed on the daily and the weekly charts. Downside, as of now, 2400 is acting as a very crucial support levels. In fact, I can say in a simple language, it got stuck within the range of 200 points. Any move on either side or breakdown on either side will decide the clear trend of this particular counter. My view is little bit cautious to negative. I will suggest if you're getting any uprise or any uptick rally towards to 2600 or so level, sell on rise strategy should be applied. The overall setup on the technical front is not so positive. So sell on rise strategy should be applied in this particular counter.